Hey everyone, it's Carla here, mortgage broker from Wealthi. And today I wanted to take you through a scenario of a purchaser who is looking to buy a home in a rising interest rate environment. So let's have a look. In this scenario here, they're both the same. The purchaser is looking at purchasing a property at $555,000. They're getting a loan amount for $500K. It's going to be one person. They've got expenses of roughly $20K a year. Net incomes are roughly $72K per year, and they're looking at purchasing an investment property on a principal and interest loan. So what it looks like in this scenario here, it's being assessed at 3.5, so that's the interest rate at the moment, with the 3% buffer that banks add. Now, this is something to note. When you go for a home loan, banks are going to assess you at that 3%. Yes, we can do our calculations on what the actual interest rate is going to be, but then they're also going to add that 3% buffer to make sure that should interest rates happen, like interest rate increases happen, you still can afford this loan, because yes, a lot of you will fix your loan, but coming off that fixed time, there will be increases. So this is just something to pay attention to, and I think is really important for those who are out in the market, especially for the people who are saying, well, I might as well wait to buy because property prices are coming down. Now, if we look in this scenario, this person currently has a borrowing capacity or a maximum loan amount of $688,000, $669, which is excellent. They can go and afford this $500,000 loan. However, I want you to have a look at two things. First of all, what the monthly repayment looks like. So roughly at that assessment rate of 6.5, it's $3,160 per month. Now, should interest rates rise and increases by 100 basis points, this is what happens to your borrowing capacity. You lose some of your buying power. Instead of a borrowing capacity at $688,000, you're now actually looking at a maximum loan amount of $622,000, which means you've lost roughly 10% of your buying power. $66,000 with 100 basis points increase, and your monthly repayment also increases. So I think this is really important for those who are looking to get into the market. You need to be able to chat to your mortgage broker, chat with your financial advisor, chat with your team to see what is the best option for you and get a better understanding of what it looks like for your finances in a rising interest rate environment. If you are someone who is looking at purchasing, please feel free to contact me or my team today. We'd be more than happy to help to have a look at this and see what the scenario would look like for you. Everyone's scenario is different, but this is a really simple breakdown of what it could look like with these increases and what happens to your borrowing capacity when you're looking to purchase a home or investment. Feel free to reach out today. I'd be more than happy to help. Thanks, guys.